Hello, everyone, and welcome to our show today. Today, we are going to be talking about business credit. We're going to be talking about all kinds of cool things that business credit can do for your company that a lot of entrepreneurs don't know about. So by the end of this, you're going to understand a lot of cool things that you can do with business credit that'll help you grow your business faster, help you get the money that you need. And we're going to dive in and decode all of those that don't know me. I'm a CEO at Credit Suite here. Credit Suite, we help you get business credit for your business. EIN that's not linked to your personal social. If we can help you all along the way, I'll include our phone number and some cool links to grab free guides, get credit, and get financing all at the bottom of our webinar slides. So let's talk about business credit. When we're talking about business credit, we're ultimately talking about credit that's linked to a business's EIN. This is not credit that's linked to your social. So as an entrepreneur, we actually have three types of credit. We have bank credit, which is credit that's assigned by the banking system. It has their own reports, their own scores. You'll never see it. It's used internally in the banking system. And then you have consumer credit, which you're familiar with. And then you have business credit, or often referred to as corporate credit as well. And the difference is that, personal credit is credit that's linked to you personally. It's linked to your social. Okay, corporate credit or business credit is actually credit that's linked to your business EIN number. So the biggest difference here is that this is really gauging your business's ability to pay its bills, not you as an actual consumer. So with business credit, you can basically get vendor credit. You're able to get, which is basically credit at a lot of trade vendors. So trade vendors are vendors that sell products, they sell services, and they'll give you credit lines to use for their own products and services, right? That's exactly what vendor credit is. So there are literally hundreds of thousands of vendors around the country, but the problem is 97% of them don't report the credit that they'll give you. But that is what vendor credit is. Vendor credit is basically credit that's issued by trade vendors for you to buy products and services in their stores. You can also get high limit accounts with almost all major retailers. I mean, Nordstrom and Macy's offer corporate credit. Costco and Sam's Club, Amazon, Walmart. You name a retailer, from gas stations all the way through to clothing stores to grocery stores like Meijer, for example. They all offer this kind of corporate credit that's for the EIN, that's not linked to the social. And there's also fleet credit. I kind of put that in the retail credit category, but fleet credit are basically fuel stations. They're gas stations. For a lot of us that are not in transportation, we don't understand the value of fleet credit. For people that are in the transportation industry, you really understand the value of fleet credit, because fleet credit is where you're able to come in and get fuel, get gas cards at places like BP, Chevron, Sunoco, Conoco, Pilot Flying J, almost every major fuel station around the country. So again, if you're in the transportation industry, these are really essential to be able to fill those 18-wheelers where the gas is $600 or $1,000 just to fill the tank. And cash credit. And that's what I refer to it as cash credit. Now, cash credit are not credit lines. These are just credit cards, Visa cards and MasterCards and American Express, Discover. These kind of credit cards you can use anywhere. So I differentiate retail credit tier as, credit you can only use in retail stores, in their store. And then the cash credit tier is like a credit card you can use anywhere. So an example of that is BJ's Wholesale Warehouse. Okay, so BJ's has a BJ's credit card you can use in their store, and they also have a BJ's MasterCard you can use anywhere. You can use it at Sam's Club if you want to. So that's what cash credit is. And then also auto financing. You're able to get all of that without a personal guarantee, without a personal credit check, all completely based on business credit quality. So I describe it as simply as this. Business credit is a way for your business to fund itself. It doesn't need your guarantee. It doesn't need your personal credit. It doesn't need your collateral and your cash flow. It needs nothing other than the actual credit profile that you're using to build it. You're using vendor credit. You're building your credit profile. Then you're using that credit profile to fund the business by getting all of this credit, where you don't really need anything other than the credit profile that you're establishing to be able to get it. So that's what business credit can get. You can do a lot more with it, as I'm going to teach you today, but these are the things that you can do with business credit alone. Business credit only, you're able to get all of these kinds of credit based on really no other factor other than that. And so that being said, it allows you to basically get approved for business credit accounts regardless of personal credit quality. When you build it the right way, there's no credit pull. We'll talk about that a little bit later as we get into some benefits. So a lot of reasons that you want to build business credit. I think we'll talk about 12, 13, 14 reasons today that a lot of business owners don't know about. One of which is that there is no impact on your personal credit. So first of all, this is the biggest number one mistake I see entrepreneurs make. And to give you an idea, we've helped, I don't know, like 42,000 business owners get money at this point. So I know a little bit about this. And of all the ones I've seen, the biggest mistake I see them make is that they use consumer credit cards to fund their business. And here's how it goes. They start a business, they have an idea, they think it's going to cost $5,000 to get the business off the ground. Then they use a personal credit card because they're like, hey, I've got a credit card with a $10,000 limit. Why not use that? Then they use that credit card to start funding the business, expecting to start making money in 30, 60 days. Then, entrepreneur, what happens to all of us as entrepreneurs sets in. We realize that it takes a way more money than we estimated and way more time than we estimated. Now, all of a sudden, instead of $5,000 to get that startup off the ground, it's 10, 15,000. Now, all of a sudden, instead of 1 or 2 months for the business to generate cash flow, it's 3, 4, 5, 6 months. And all of a sudden, somebody has maxed out one or multiple personal credit cards and then has an elongated time before they're able to actually get the revenues to pay those credit cards down. The problem is the moment that most people look for help. And at that point, it's really hard to help them because they've already hurt their consumer credit scores. How have they done that? 2 factors. First of all, when you're using your consumer credit to be able to fund a business, you're really damaging 30% of your score that's based on utilization. I'm going to talk about that in reason number 2. But the other problem is that 10% of your credit score is based on inquiries, how much new credit you're getting. And here's another problem. When you look at inquiries and how inquiries are calculated into the consumer FICO score, then it works this way. One, they're looking at like how many inquiries you have, how many groupings of inquiries you have in a certain period of time. But here's the problem. If the inquiry doesn't turn into an actual account that shows on your credit report, the inquiry hurts you more. So that's the way FICO works. If you have an inquiry on your credit report, that's okay. If the inquiry turns into a loan or a credit card or something, that's actually pretty good. But if the inquiry doesn't, then FICO picks up there's a problem with the credit report on why these people are inquiring into your credit report but not giving you credit. So when you're using consumer credit for business accounts, especially if they end up reporting on the business credit reports, well, then you have problems because you're putting inquiries on your consumer credit report you don't need to put on there. And then you're also putting consumer credit accounts on your consumer credit report that's ending up on loans and credit lines that end up on your business credit reports. So the consumer bureaus never see that credit and it further damages the inquiry section of your credit report. So utilization, inquiries, this accounts for 40% of your overall FICO score. And so by using consumer credit to try to fund your business, well, you really damage overall that amount of your credit score. And that can result in a plummeting of the actual overall score. The problem there is there's a lot of funding you can get even as a startup that you can no longer get because now you've severely damaged the consumer credit score. So a lot of problems when you're trying to use consumer credit to fund a business, but business credit allows you to do away with this. What it allows you to do is basically not use your consumer credit to fund your business any longer. Don't get me wrong. You're still going to need credit pulls when you get an SBA loan or you go to get a big credit line. There's still times that they're going to need to look at your consumer credit. But all these credit cards, auto financing, all this other Visa cards, MasterCards, your Amazon, all the stuff that you primarily use to pay most of your expenses, you don't have to use consumer credit for that. You can use business credit for that. And that's a huge benefit because that's what business credit was designed for. It was designed to help you fund your business, to let the business fund itself, to keep you away from using consumer credit to try to fund your business, which it was never set out to do. And that keeps your consumer credit scores high and good, which helps you get loans and credit lines and things you're going to want to get down the road and use your established business credit to then qualify for the money you need to actually fund the business. The credit cards, the auto financing, the Visa card, the store card, all that you're able to use your actual business credit to fund your business, not your consumer credit. So speaking of credit scores, this is the bigger problem with using consumer credit to fund a business. As I mentioned, consumer credit wasn't designed to fund a business. The limits are designed for you as an individual, as a consumer. Like we'll talk about limits a little bit later, but the limits are way smaller on consumer credit cards than they are on business and corporate credit cards. Because like people don't spend as much money as businesses, not even a fraction as much as businesses. So the problem is when you use consumer credit to fund a business, you're really damaging utilization. And the issue there is 30% of your consumer FICO scores based on utilization. To give you a mathematical comparison, the FICO score, the two biggest factors that make up your personal FICO score. One is payment history. It accounts for 35% of your overall score. Utilization, what percentage of your high credit limits you're using, accounts for 30% of your overall FICO. Think about what FICO is telling you there. They're telling you that by maxing out your consumer credit cards, you literally are damaging your credit score almost as much as just paying your bills late. That's how severe it is. 35% of your score's payment history, 30% utilization. It's a really big deal. So one of the biggest things you can ever do to fix consumer credit is get very high limit accounts and really manage your utilization. The problem is when you try to use consumer credit cards to fund a business, you max out those credit cards. Since it's nearly a third of your total score, I've seen scores plummet 120 points because of a $200 increase on the balance. That's right. Okay, I've seen over 10,000 credit reports in my time. I know a lot about consumer and commercial credit. I've written books on both topics. And what happens is that when you have small limit credit cards and you start maxing those out, then it's the same as maxing out a big high limit credit card. It's all based on your utilization ratio. And if you take a $500 credit card and put $200 on it, then all of a sudden you see your consumer credit scores plummet. Again, in the mortgage business, 120 point drop because of a $200 increase on a credit card limit. I've seen it before. Okay. So you need to make sure that you don't use consumer credit cards to fund a business. Business credit allows you a way to get around that. You're able to get business credit, put your expenses on there. It doesn't report on the consumer credit reports. It reports to Dun & Bradstreet. It reports to Experian. It reports to Equifax Commercial. It reports on your commercial credit reports, and your commercial credit scores aren't based on utilization. They're based on how you pay your bills. We'll talk about that later as well. So this is one of the big reasons, another reason that you want to make sure that you build business credit. So that way you don't damage your personal credit scores by putting on higher balances on there that you're using for your business, when the reality is that you could use business credit cards to do exactly the same thing as well. Okay, so that being said, Steve, what's up? Thanks for coming in. And Dane, thank you very much for coming in. You didn't miss too much. We're just getting kicked off here. Okay, so another reason that you want to get business credit is that you want to make sure that you get credit scores and get credit and get financing quickly. And in the business credit world, I talked about the consumer FICO score already. There's 5 factors to this. There's the utilization, which we talked about. There's how much new credit you're getting or inquiries that we talked about. There's the credit mix, or the mix of credit that you have. For example, FICO wants you to have 1 to 2 mortgage accounts, 1 to 2 installment loans, 1 to 2 auto loans, 3 credit cards. So that mix of credit that you have. It also it has to do with payment history, which we talked about as well. And also the length of credit history. The third largest factor of your consumer FICO score, how long you've had credit for. Business credit scores are based on one thing and one thing only: how you pay your bills. If you pay your bills on time or early, you get a good score. It's really as simple as that. And 100% of Dun & Bradstreet and Equifax's credit scores are based on this one factor. And 85% of Experian's business credit scores based on this factor. All you have to do to be able to get good scores is pay your bills as agreed. This means that you're able to get good scores quickly, and you're able to deploy those scores to get a lot of credit very quickly as well. That's how it works. So by coming in and being able to get some vendor accounts, remember, those are accounts with trade vendors, and paying those accounts as agreed, that'll give you a good score because your scores are based only on how you pay your bills. Now we use this established credit score to start coming in and getting all kinds of high limit revolving accounts in as little as 60 or 90 days. Think about that. That's insane. The fact that you can get a $10,000, $20,000, $30,000 limit credit card on an individual account, an Amazon account, a Walmart account, a Staples account in 2 to 3 months, that from starting a credit profile from scratch is insane. But that's what you're able to do with business credit that you could never do with consumer credit. And it's possible because we get these vendor accounts. We then pay the bills on time. That's the only main factor that calculates into the score. And with that, we get good scores. Then we use the established good scores to then get all kinds of credit that we want to get. So because of this, business credit can be built really fast if you know what you're doing. Within 2 or 3 months of this process, you're getting revolving credit at most major retailers. Again, if you're working with a company like Credit Suite that knows what we're doing, or if not, it'll just take you longer to figure out the accounts that'll approve you based on how many you already have reporting. Either way, it's very quick to get this credit because of the way the scores are calculated. Now, Steve says, and great, Nancy, thanks for the great information. And Steve says, I know I went from 820 to 680, now only owe 30 grand. out of the 240,000 total credit lines. So now I'm back updated. So Steve is talking about exactly the same thing. His credit scores dropped 140 points because he used his consumer credit cards to fund his business. Now he's fixing that problem by establishing business credit, but it gives you guys an idea. What would your credit score be if, like Steve, your score dropped 140 points? And this isn't theory. This is somebody coming in saying, here's the exact numbers of what happened to my credit, and here's how I'm fixing it, moving it from consumer to commercial. And Janice says, hey, from Chicagoland. What's up, Chicago? And Javier says hello from Chicago. Both of you guys are in from Chicago. And Janice says, always good content. Thank you. And Yamaine says, excited day. Thank you very much. And Nancy says, should transfer our mortgage to our business credit if that's an investment property. Look, the people that I know that specializes in flipping properties, here's how they do it. Every single commercial property they own or investment property is in a different LLC. Just saying, it's something to consider. So the people that I know that that's is what they do is they're in the investment property world. They set up a separate business for every single property, and they do it for liability reasons to protect themselves. I'm not an attorney. You should talk to an attorney about those kind of things. But again, it's something to consider to actually come in and create a different LLC or entity for every investment property you use. Okay. And then that being said, it's pretty tough to move the mortgage over, but you absolutely can put the loan in the business name. That's something you can absolutely do. So another reason you want to build business credit is that anybody can see your business credit reports. Okay. So anybody that wants to see this information can see the information. Okay, that means when it comes time to getting money for your business or any kind of money, then anybody can see this. Okay, banks, auto dealers, mortgage companies that are giving you commercial mortgages, lenders, suppliers, anybody that's in the business of giving you money or even insurance can see your business credit reports. It's not like consumer credit where they have to have your permission. You see, somebody has to have your permission to pull your credit report because a law called the Fair Credit Reporting Act, which rolled out in the 1970s, requires that that be the case. But there is no Fair Credit Reporting Act in the business world. Now, this is important for a lot of reasons. There is no structured system to dispute credit like there is in the consumer world because there is no Fair Credit Reporting Act, which regulates how the credit bureaus and creditors can act. Another problem is, again, they don't regulate who can and cannot see your business credit reports. As a matter of fact, if you go to Dun & Bradstreet's website right now, the very first question they ask you when you go to get a credit report is, do you want to pull your own or do you want to pull a credit report for another business? Okay. And I can tell you that I work with a lot of people that buy businesses. And this is one of the first things that I teach them how to do, how to get a business credit report on the business that they're interested in buying. They buy them in bulk. They make their decisions of which companies to buy based on the business credit profile somewhat as well. So it's very important because anybody can see those business credit reports in the business world. But even further than that, anybody can see what's on your reports because the information is public. So that means your prospects, it means your competitors, it means your clients, it means all of these people can see your business credit reports. I was on a podcast once and I did this just to surprise the host. I actually pulled her business credit report live during the podcast just to show her how it works. And she said, wow, that's crazy. Can you do that for anybody? I'm like, yeah, I can. She's like, can you do it for my competitors? She's like, I'm like, yes, I can. She's like, why don't you hang on after the show? And after the show, we actually pulled one of her competitors. And what we found was that they started to go late on payments months before. Now, this was interesting because it allowed her to actually make a jump and make moves knowing that they were in trouble. So wouldn't you do that if you had the power to do that? If you could look at your competitors and see that during COVID, all of a sudden they start to go late on all their accounts, you can pounce. You can do whatever you are. You can start spending more money and outspend them on the advertisement. You can solicit them as an opportunity to buy them. Think about the advantage it gives you if you can see what's happening with your competitors, how they pay their bills, how many employees they have, what their revenues are, what their profit is. That's all public information per commercial credit reports. But here's the thing. Think about what other people can do with that information about your business. So your business credit report isn't just something you use to get money. It's something that controls your reputation. And for all of us financial savvy people out there, we pull these things. I pull hundreds of commercial credit reports a year because I just want to know what's going on. Okay, in the initial election, I pulled the Clinton Foundation's credit report and I pulled the Trump Organization's credit report. I even did a live stream showing both of their credit reports because it's public information. Anybody can access it. I pull commercial credit reports on businesses all the time, and a lot of other people like me are doing it. So you need to make sure that you build a business credit report score because it's your reputation. Anybody can see this. Competitors, prospects, clients, on top of the lenders, the suppliers. So you've really got to make sure that you control this because ultimately it is your reputation. It's just that important. Okay. And Daryl says, can I use my social to open a business card solely to get a line reporting? You can. That's called a personal guarantee. But you need to make sure that the account reports on your business credit reports. Oftentimes, if you supply a consumer credit check, they're going to pull or give them authority for a consumer credit check. They're going to pull your personal credit. They're going to make the approval decision on that. And sometimes they report it to the consumer reporting agencies, not the commercial. So you need to want to ask them that to get clarification before you take that step. But there also says, then close off that line and use my business credit report to open those lines. You can do that. Just keep in mind the things that I just warned you of. And then Daryl says, also, can I use my EIN for a car loan to get reports on my DMV? You can do that as well. You can do it without a personal guarantee when you build about 14 accounts or more. But even if you have no business credit established, you can absolutely put your car in your business name. And again, depending on the dealer and the lender will determine where it reports, whether it reports to consumer or commercial, whether you provided a personal guarantee. There's a lot of variables, but yes, you can do it. If you have 14 accounts, you can even get an auto loan with no personal credit check and no personal guarantee either, just so you know. So another reason that you want to build business credit is there's often no personal liability. There's no personal guarantee, okay? So what this means is it means you're not personally responsible for your business debts. Look, here's the problem, okay? 90% of business owners fail, but yet how many of us expect to fail? We don't. But COVID-19 has shown all of us that things come out of left field that we never saw coming, that are industry killers, that are business killers, okay? I've got many friends that own bars, and I can tell you they are getting crushed right now. Two of my friends opened up a second location months before this whole thing went down. So you realize as an entrepreneur how little control you really have when things like this come out of left field and upset the economy. I owned a mortgage company, first business I ever owned, got wiped out by the mortgage crisis, and I learned my lesson back then. A lot of people are learning that lesson for the first time right now. So here's the deal. Don't ever be personally liable for your business debts if you don't need to be. Don't get me wrong. If you get a $250,000 credit line, they're going to want you to be a guarantor. If you go to get a $1 million SBA loan, they're going to want you to be a guarantor. But there's a lot of credit we've talked about, Visa cards, MasterCard, store credit, vendor credit, auto financing, that you don't need to be a guarantor. If you are a guarantor and you default, they're going to come after everywhere they can come after to get the money. They're going to take the business assets. They're going to take the personal assets. They're going to take everything they can get their hands on. So let me give you a real world story of my life to explain to you how this works, okay? I came in, got credit with Bank of America, didn't know these things back in 2006 and 7. It's why I'm here teaching it now, because of what happened to me, okay? Then what happened was the mortgage company went out of business because like the mortgage crisis happened. So I wasn't able to pay this credit card with Bank of America. So Bank of America then came in, waited till I had the maximum amount of money in my personal Bank of America account, and then took all the money. It was just gone. And now, if you think about the way you manage a personal credit or personal bank account, you write checks against that money, right? So I had all these checks outstanding for all my bills, and the money was taken out of the account. Of course, I could never get it back from Bank of America. All those checks for all my utilities, everything bounced. It was catastrophic to me personally, okay? And it all happened because I personally guaranteed that debt. Now, if I would have done it the right way and got the credit card without the guarantee, Bank of America could not have done that. All they could have done was come after my business assets, but not my personal assets. You need to protect your personal assets. It is your responsibility, especially if you have your family. It's a huge responsibility because you need to protect your personal assets. And you can't do that if you guarantee debts. Some debts you may need to guarantee, a lot you don't. Business credit helps you get around personal guarantees so they can't come after your personal assets if for any reason you do unfortunately have to default on that card. Okay, and Daryl says, can I use my we talked about that. Okay, so cool. Good. I'm up to date on questions. So again, being in business is risky, guys. It's high risk, it's high reward. If we make it and we hit a home run with the business, then we could live financially set for the rest of our lives. But statistically, the odds are against us. So you don't want to like do anything that the odds are against you if you have another alternative. It's one of the reasons that it's just unnecessary to personally guarantee a lot of the debts, and business credit helps you get around that. You're also able to come in and double dip on welcome bonuses and on points as well. So if you think about it, you get points, you get welcome incentives with all kinds of credit cards that you open. But when you're able to build business credit, you're able to do this with your consumer credit cards, and you're also able to do this with business credit cards. So it helps you earn eligible bonuses, eligible points that you can either turn into cash rewards or use for a multitude of other reasons. As a matter of fact, last week, I think it was last week, it wasn't this week, I talked about how to get credit cards where the points can be transferred over to donate to your favorite charities. Okay. I'm big on charities. I love to donate and help other people. So again, you're able to use these points for all kinds of cool things, whether you can just use the cash for different reasons, whether you could use it just for a million other things that you could buy the points and use the points for, even give it to charity. It gives you the ability to earn a lot more welcome bonuses, a lot of extra points using consumer and commercial credit cards. Now, it also increases the overall value of your business. So Roland Frazier is the best guy I've ever met when it comes to buying businesses. He's got something called the EPIC Challenge, capital EPIC, EPIC Challenge. You should look into it. Okay. And Roland teaches people, thousands and thousands of people, how to buy businesses. And I'm his business credit guy. I'm the guy that comes in and teaches all the students how to access business credit reports, what they say about the business, and why you want to use them to make decisions on whether or not to buy the business or not buy the business. So what you might not know is there's a whole sub community out there of people that are making acquisitions in businesses that know this and are accessing business credit reports to make buying decisions. Because why not? If you could choose between A SEO company and B SEO company, and A has tons of business credit, pays its bills as agrees, and has all these credit limits that you're able to take over when you buy that business, and B has none of that, which one has more value? So you're always going to go, if you're buying a business, towards the one that has better credit, towards the one that has more open credit lines you could tap into. This is one of the reasons you need to build business credit, because it increases the perceived value of your business to people that really make a living on buying businesses. So if you ever want to exit and sell, you need to build business credit because it's going to tie into the overall value of your business. Now, another reason that you want to build business credit is because it determines your loan approval and terms. Okay, if I pull a commercial credit report right now, it's going to tell me two things at the top of it: your score, credit score, and it's also going to tell me the recommendation of credit from the credit bureau. The credit bureau recommends to lenders, credit issuers, and suppliers how much money they should give you, how much money you should be lent, how much money you should be issued in credit. And lenders, credit issuers, lenders, or suppliers, they all use that information to determine how much money you should be given. Should you be approved or be denied? What kind of rates and terms should you pay? So if you want to get approved with higher loan amounts, if you want to get lower interest rates, if you're sick of getting denied, you need to know it all comes back to the exact same place. I literally have a stack of denials that I collect, and it might not look big, but if you look at little pieces of paper, it's a pretty big stack of people that get denied strictly for the reason based on business credit. The lender comes back and says, sorry, we're not going to even approve you based on business credit quality. Okay, I talk to a lot of people that don't like the interest rates they get. Then they build their business credit. Then they come back and get interest rates half as much. The rate you pay is going to be based on risk, and your risk is determined based on your credit quality. If you have no business credit established, you're very high risk. Okay, Equifax and Experian will literally give you a failing credit score, 26 to 28 out of 100. Very high risk because you have no credit. With no credit, the fact that you have no credit makes you high risk. So when you have no to little credit, you become very high risk. It's harder to get the money you need from lenders, credit issuers, suppliers. It's hard to get low interest rates. It's hard to get high approval amounts. All of that is based on business credit quality. But think about it. Isn't that common sense? Imagine trying to go get a car loan, trying to get a home mortgage, trying to get a credit card with no established consumer credit. Like, how's that going to go for you? It's not going to go well, right? You're going to need a signer. You're going to need a guarantor. You're going to need somebody else who's established themselves to get approved. Okay. But in the business world, that happens all the time. A lot of people are denied the money they need because they haven't taken the steps to actually build the business credit like they should build the business credit. Okay. And Daryl says, thank you. Love your show. Appreciate it. Thanks. Keep spreading knowledge. Thanks, Daryl. I appreciate that. So another reason is that business credit doubles your borrowing ability. So think of it like this. If I go into Staples and get a consumer credit card, and I go into Staples tomorrow and try to get another one, they're not going to approve me. Like, you know, stores don't just issue you credit card after credit card after credit card. Okay. You're not going to get a Best Buy credit card. Okay. And then go get another Best Buy credit card. That's not how the system works. If you have a Best Buy credit card, like you have a Best Buy credit card, you're not going to get another one. Unless, like I said, there are sources like BJ's Wholesaler, where BJ's has a MasterCard with their name on it you can use anywhere, and a BJ's credit card you can only use in their store. But outside of that, you're not going to get a second credit card with almost any retailer. But with business credit, you can. I can go into Staples and get a consumer credit card with Staples today, and I can go into Staples an hour later and get a business credit card with Staples. It's the only way you can get twice the credit at every single retailer that exists, because they offer consumer credit and they offer commercial credit. These two are completely separate, so you can get one, then you can get the other. It's the only legal way that you're able to actually come in and do this. If you don't have business credit, then you're only as confined as the limits on the individual single account that you get with that credit issuer. Now, speaking of this, it actually more than doubles it, because what happens in the business world is that per SBA, limits are 10 to 100 times higher on commercial credit accounts than what we find with consumer credit accounts. So what happens is that businesses, I mentioned earlier, have a bigger appetite to spend money. So when you start getting limits with credit issuers in the business world, they're 10, they're 20, they're 30, they're 40, they're $50,000 limits. This blows our clients out. I mean, it blows their minds. Our clients are blown away that 2, 3, 4 months in, they're getting $10,000 limits. Like, they've never thought that was possible, because we're used to consumer credit. Like, think about how hard it is to build consumer credit card limits. You start with $500, you prove yourself, you get to 1,000. You prove yourself, you get to $2,000. Like, you know how long it takes? Like, years to get to $10,000 limits, unless you have a co-signer that's helping sign for you. But if you don't have that, you don't get $10,000 limits until you've worked on your consumer credit for years. But in the business world, you get it in 2 to 3 months. Why? Because businesses spend a lot more money. You may never spend $10,000 at Dell on home computers, right? I'm at my house, I've got one computer. And my daughter has one in a room she never uses, because, like, I had an extra one and I gave her my extra one, right? Okay, but we only don't have like 2 computers in our entire house. We only have one, really, and then they use their mobile devices and the smart devices, laptops, all that kind of stuff. So the bottom line is, in a business though, man, I got a storage unit because out of COVID, we didn't need one of our offices. We shut the office down. I've got 15 computers sitting in there. Like 5 of them are brand new in boxes. So this is why businesses need more credit, because we spend a lot more money. We may never need 10 grand to spend on home computers, but we easily need 10 grand to spend on businesses for computers. Okay, we spend $100,000 plus just on advertising on our American Express card every single month. I can't even imagine spending $100,000 on all of my credit cards combined in a month as a consumer, right? Neither can you. I mean, none of us can. So that's why the limits are so high on these business credit accounts. But here's the other thing. It's also why you can't use consumer credit cards to fund your business. They weren't designed to do so. The limits are really small because you shouldn't need to spend that much money. Okay. As a matter of fact, when COVID hits, what happens is all these credit issuers start reducing your limits because they need the credit to issue to new people, and they're kind of constrict themselves. So they constrict and they're like, hey, you have a $30,000 limit on your consumer credit card because you have really good credit, but you're only using $5 grand. So we're going to lower it to $10,000 limit. So this happens all the time whenever the economy changes, because again, consumers don't use typically high amounts of money on their revolving credit cards. So the limits aren't really high unless you get years and years of well-disciplined borrowing. But in the commercial world, we need to spend more money, which is why these limits are so much higher and why it's easier to fund a business with $10,000, $20,000, $30,000 limit credit cards than actually trying to use a consumer credit card with a $1,000, $2,000, $3,000, $4,000, $5,000 limit. Okay, as I mentioned before, business credit building is really fast. It's because credit scores can be established so quickly. You come in, we get some trade vendors, you pay them as agreed. They report to D&B, Equifax, Experian, Commercial. That'll give you a good score. We then use your newly established positive score to go get all kinds of revolving credit at almost every major retailer. It can happen very fast. And why this is important, and it's something I don't mention here, is that you can get business credit when you can't get any other kind of financing. You see, to get any kind of loan or any kind of credit line, you need one of 3 strengths: cash flow, credit, or collateral. I call it the 3 C's: cash flow, credit, collateral. If you don't have good cash flow with your business, you don't have collateral, and you don't have good credit, you're not going to get a loan. You're not going to get a credit line in the business world. But you can still get business credit. Business credit can be built regardless of consumer credit, regardless of cash flow, and regardless of collateral. So it's a great way to get money when you can't get money anywhere else. And you can still get it really fast if you can't get money anywhere else. So you can still even get a business off the ground and start a business using business credit to fund the actual business that you're starting because it's so fast to build. So a ton of benefits by building business credit quickly and accessing money quickly, even if you can or if you can't get other kinds of financing. Now, another reason that this is so important is that even startups, as I mentioned, can get business credit. Look, the reason startups can't get a lot of other kind of financing is because you typically have to prove your revenue, unless you go with a no doc deal. We have a credit line hybrid program. You can get $150,000 in credit lines, 0% rates, no doc, no bank statements, no tax returns being looked at. Fantastic way to get money for your business. Okay. And it works for startups. But most other kind of financing wants to see your bank statements. They want to see your tax returns. They're looking at your revenue. They're looking at your cash flow. Business credit doesn't look at cash flow. So it doesn't matter if you're a startup. And here's the other cool thing. It doesn't even matter if you're in a high-risk industry. So let's say you're a real estate investor. You're still able to come in and build business credit and use it to buy, fix, and flip properties, even when you can't get most other kind of money because you're just starting a real estate investment and you're in a high-risk industry. It's like a double whammy against you. Business credit doesn't matter. You're still able to get it even with high limit accounts, even if you're high risk, and even if you're a startup business. So it's one of the best ways to get money as a startup because it's very easy to qualify when a lot of other kind of financing you can't get because, again, business credit's the only way you can get money without collateral, without personal credit, without cash flow, unless you have some kind of guarantor that can help you with those things. Okay. Also, the knowledge of business credit just gives you a huge competitive advantage. Okay. It's another huge benefit. Now, Daryl, or nope, actually, I'm good. I'm all caught up on questions. So another reason that you want to build business credit here is that when you know how to access business credit, you have a huge competitive advantage against the companies that you don't, that in your industry that don't know how to do this, because you can get a lot more money than they can get. And the bottom line is, this is the way marketing works. Whoever can spend the most to acquire a customer wins, period. Okay, have you ever tried to compete on major keywords against like big publicly owned companies? You stand no chance because they can outspend you a million times to one. Probably no exaggeration, they can outspend you a million times to one. So the reality is that business credit gives you a competitive advantage because 90% of the general population of entrepreneurs knows nothing about this. They don't know how it works. They don't know the advantages. They don't know how to get it. And when you do, you're able to establish a positive reputation for your business, make your business more valuable to possibly get sold down the road, and access all kinds of credit for your business where your business fund itself to grow faster. Then it makes it easier to get the loans and credit lines you need. Bottom line, it's way easier to tap into the money you need to start and grow a business when you actually know about business credit versus your competitors that know nothing about it. So yet another huge reason you want to build business credit. And as I mentioned, it also leads to bank loans as well. Okay, look, this is sometimes a misconception with business credit. People think that just because you build business credit, you're going to go get a loan. That's not how it works, okay? If you go to get a big loan, if you go to get a credit line, they're going to look at your business credit reports. I promise they will. But they're also going to look at your revenue. They're also going to look at sometimes your personal credit. Sometimes they look at your tax returns, your bank statements. There's other things being looked at there, okay? But business credit is a major factor to getting bank loans. Even though it's not the only factor they look at, it's a major factor they all look at. So if you want a loan, if you want a credit line, if you want revolving credit, you've really got to establish business credit, because business credit's really the key for you being able to come in and being able to actually get the bank loans that you're looking for, and not only get approved, but get approved for the most money at the absolute best terms. And as I mentioned, your payment history matters. Look, the problem I see with a lot of entrepreneurs is you pay a lot of people as agreed. Okay, you pay your utilities, you pay your rent, you pay your lease, you might pay your commercial real estate mortgage, you pay your credit card, you pay all these things that you pay on a regular basis. But if you look at your business credit report, you'll see that sometimes none of that reports. And that's a huge problem. You need other people, especially lenders and credit issuers, to see that you're using money the way that you're using money. This is what gives them the incentive to want to lend you money when it comes time to get money. So think of it like this. As I mentioned before, we spend over $100,000 a month on advertising on our American Express card. Now, we do that on our business American Express card that reports on our business credit reports. Now, here's the deal. We pay it off every month. So what I'm saying is that we have the money to spend that and to be able to buy that or buy those ads without using a credit card for it. So why do we put it on a credit card just to take our cash and pay off the credit card? We do it because we're showing the world that we spend $100,000 a month on our Amex card. Now, when I go to get a $250,000 credit line, it's way easier for me to get than somebody that's not doing that. Because when the bank looks at my commercial credit report, they see that we're spending $100,000 a month on that one Amex card. So it makes perfect sense why we're applying for a $250,000 credit line. But if that $250,000 credit line applicant goes in and the commercial credit report's looked at, and yet you're spending $100 with a vendor account and nothing else shows, well, then the bank is going to be like, why do you need a $250,000 credit line when you have no money you're even spending on credit now? That's the problem. Your payment history matters, and you need to show the world, meaning lenders, credit issuers, suppliers, that you are responsible and that you are spending the money that you're spending on a monthly basis and that you are paying your bills responsibly. When most of what you're paying doesn't report, it's really problematic. It's why you need to get accounts that report and then use those accounts and even pay them off in cash so you don't have to pay interest on them, but you at least are establishing that you have a track history of paying your bills as agreed. So when it comes time to get that loan, when it comes time to get that credit line, you have the track history that's needed for the lender or the credit issuer to want to issue you that credit. So a lot of things that business credit can do, right? It can help any business. It doesn't affect your personal credit. It can be built with extremely high credit limits. It works for startups. It helps you establish a positive credit history that helps you get loans and credit lines, helps you get the most money at the absolute best terms. So there's a lot of reasons that you really want to consider building business credit for your business. Now, if you want to learn more, you can go to creditsuite.com/live. That's creditsuite.com/live. If you go to creditsuite.com/live, you can get a free guide on building business credit. I map out the exact steps to take, the same steps the big companies take to succeed with building business credit. You can grab it at creditsuite.com/live. And if we can help you along the way, give us a ring, 877-600-2487. If you give us a call, we will get your business credit reports for free for you with Dun & Bradstreet, Equifax, Experian. Free credit reports, $250 if you get them from the bureaus directly. We get them for you for free. We'll give you tips and tactics on improving your business credit. We'll do a fundability assessment for you. We'll talk about all the money you're able to qualify. It all happens on a phone call, so feel free to give us a ring and let us talk about the fastest way for you to be able to get business credit for your business. And if you like this, then do me a favor. Hit the like button, hit the love button. I can see that in real time, and I really appreciate it. Share it so other people can really get the value of this too. As an entrepreneur, I really love to help entrepreneurs. I'm sure you're the same. So let's help others by getting them the valuable info as well. And also don't forget Tuesday and Thursday at 1, 11 o'clock on Wednesday, all Eastern time. We go live on Periscope, YouTube, and Facebook. And if you like this, then check out our podcast, The Business Credit Financing Show. Check out our Instagram. Check out our Twitter, where we also have daily tips. You can get all of our social channels and our podcast by just going to creditsuite.com. Creditsuite.com, top right of our page are all of our social channels and our podcast, so you can listen on the go, you can get daily tips, and you can access all of our information on different ways to get loans, credit for your business, and improve your fundability to get the most amount of money at the best terms for your company. So Joe says, can you build business credit with a home business? You absolutely can, Joe. Yes. And the guide at creditsuite.com/live will give you some of those details, but it is better if you use a virtual address instead. So you can go to creditsuite.com/virtual to get a quick link to Alliance. Alliance is one of many. There's Regis, there's DaVinci, but we love Alliance the most. And consider a virtual address. It's going to give you more credibility than a home address, but you can do it either way. Willie says, hey, Ty, what should you do when you get to 9 paid trade lines, and how do you know if your trade lines are active? Well, the only way you know if your trade lines are active is to get a correct copy of your credit reports. If you go to creditsuite.com/monitoring, it's only $24 to get all 3 of your credit reports, Dun & Bradstreet, Equifax, and Experian. Willie, it's $250 from the bureaus direct. We worked out a deal with NAV to be the cheapest in the world that offers them, because it's so important that you actually see what's on your commercial credit reports. So that'll help you see what's on there, and you want to keep building them till you get to about 14 accounts. When you have 14 accounts reporting, that's when you can get to auto financing, Visa cards, and MasterCards. But congratulations on your success. Keep working towards the way you're working. Steve says, great stuff as always. Thanks, Steve, man. I always appreciate your support. Periscope, have to see what that is. You don't need to see what that is, Steve. Periscope was the very first original live stream platform from Twitter. This was way before YouTube Live, way before Facebook Live. Periscope was the first live streaming platform. It's where I went live. You actually should find my Periscope channel. you'll be able to find Periscopes from many years ago. My very first live sessions ever were on Periscope. You can find those on our Periscope channel, but it's outdated. It, like Twitter, is dying a slow and miserable death. Sorry, Twitter. I'm just saying it. I'm just speaking the obvious. Okay. But nowadays, if you're tuning in on Facebook and YouTube as you guys are, this is the place to be. So thanks for tuning in. I'm going to be back here Tuesday at 1 o'clock Eastern to talk about more cool ways to get money for your business. Don't forget, if we can help you, give us a ring, 877-600-2487, to get your free business credit reports, to get your fundability report, and also for us to tell you exactly all the funding that you can qualify for now. With over 1,000 lenders and every legitimate funding source. So one call will get you on your way to building business credit, getting financing, and improving your fundability so you can get the most money for your business at the best terms. Thanks, everybody, for tuning in.